Dinner, the Canadian International Council honors a distinguished international leader with the Canadian International Council Globalist of the Year Award. This award is presented to an individual who has exercised leadership and impact on the international stage. Past recipients of the CIC Globalist of the Year Award include Naguib Sirwalis, one of the most important private sector figures in the course of the Arab awakening in Egypt last year, George Soros, founder and chairman of the Open Society Institute, Pascal Lamy, Director General of the World Trade Organization, Sheng Sui, former Vice Chairman of the Standing Committee of the Chinese National People's Congress, and Angel Gurria, Secretary General of the OECD. This year, we are very proud to present Madame Christine Lagarde with the 2012 Globalist Award. Madame Lagarde has demonstrated tremendous leadership in the course of her career, including navigating the global financial system through these exceptionally difficult times. We are proud to be honoring her here tonight. I'm delighted that Governor Mark Carney has agreed to introduce our 2012 Globalist. Mark Carney was appointed Governor of the Bank of Canada in 2008. In addition to his duties at the Bank of Canada, Governor Carney serves as chairman of the Financial Stability Board and as a member of the Board of Directors for the Bank of International Settlements. Governor Carney is also a member of the Group of 30 and the Foundation Board of the World Economic Forum. Governor Carney, the floor is yours.
Thank you very much, Jim. Mesdames et messieurs, bonsoir. C'est un grand honneur de vous présenter une collègue très estimée, un vrai leader de 21e et de 20e, vraiment, le 21e siècle, Christine Lagarde. Sa carrière est parsemée de succès. D'abord comme avocate, ensuite comme ministre et aujourd'hui comme directrice générale du FMI. Se sentant dans son élément partout au monde, Madame Lagarde nous inspire par son intelligence et sa vaste expérience dans les secteurs privés et publics. After a long and successful legal career, which culminated in leading the world's largest law firm, Baker McKenzie, Christine Lagarde returned to France to begin her career in public service. And wherever she goes, success surely follows. Christine became France's trade minister in 2005. 2 years later, French exports reached record levels. So she moved on to new challenges, becoming not just the Minister of Finance, but the Minister of Finance and Economy. And within 2 years, the Financial Times ranked her as the best Minister of Finance in the Eurozone. And that was back when that meant something, Christine. She's only been... This is Chatham House, right? Oh, sorry. Christine has only been managing director of the IMF for a little over a year, so we look forward to the accomplishments in advance of her next 2-year anniversary. The CIC Globalist of the Year is presented to someone who has shown leadership and innovation on the international stage throughout their career. And having had the pleasure and the honor of seeing her in action, I can recall a few examples of this. 4 years ago, almost to this day, Christine, along with Minister Flaherty and others, were in Washington for a fateful G7 meeting. Lehman and AIG had just failed. The British banking system had just been rescued. Europe's banking system was on the brink. And the very real prospect that the global financial system would collapse hung over the participants. And for a while, it has to be said, the meeting was filled with rancor. There was an unhelpful exchange over what should have been done. But Christine helped lead the charge to change the, it has to be said, empty words that had been painstakingly prepared by the deputies, change them into real action, action which avoided the worst and created the possibility of a sustainable recovery. And it was a possibility that some would seize and others would fumble. A year and a half later, we were together in Iqaluit, huddled around a makeshift fire. We had this idea of having a fireside chat, returning to the history of the G7, fireside chat. Now, Iqaluit's well above the tree line, so we had to bring our own firewood, but we did. And at that meeting, again, Christine was instrumental in helping to relaunch, along with Minister Flaherty, the G7 as a truly informal group, and one that has played, well diminished, in a very important role throughout the intervening years. It was also at that meeting that we, at her prompting, it must be said, it was at that meeting that we began to address the mounting problems in Greece. And I have to say, thank God we sorted it out at that meeting, Christine. Because you can enjoy your meal tonight. Later that spring, she was in Brussels, I was in Basel. Others were in Ottawa, Washington, Tokyo. And she helped broker a classic all-night Eurogroup meeting with a simultaneous G7 conference call and the presence of the then managing director of the IMF, which created a fiscal package which was effectively the precursor of what is now the ESM, which is an extremely effective vehicle and which also defined the IMF's supporting role for Europe, which has endured to this day. In all those occasions and in many others, Christine brings a fierce determination to the table, but she does so with such élan and intelligence that for those sitting across from her, resistance is futile. And that's one of the reasons why Canada wants all European authorities to be sitting across from the table of the IMF during program negotiations for European countries. Christine has provided exactly and provides exactly the kind of bold leadership that we need during this period of great economic uncertainty. Rather than wringing our hands over the scale of our problems, we need what she provides, which is clear advice and ability to build consensus around a bold program for restructuring, rebuilding, and rebalancing the global economy. Now, part of that rebuilding is a series of measures to create a more resilient global financial system. Substantial headway has been made on developing and implementing the G20's financial reform program. We've defined a new capital regime. It's been implemented in Canada as we speak and will be done by the end of this year. And we'll shortly outline a new liquidity framework. We've agreed some of the core elements to reduce the risks from systemically important banks, insurers, and shadow banks. And we're engaged in the messy but essential job of fixing the plumbing of the of core financial markets so they never again fail. But as I've said many times, while much has been accomplished, what is to come is just as important. Work must continue to fully end too big to fail, so that shareholders, bondholders, and management bear the consequences of the financial system's mistakes rather than taxpayers. We have to continue work to create truly continuously open core markets and to move from shadow banking, which is a source of vulnerabilities for the global system, to market-based finance, which can be a source of diversity and competition to the regulated sector. Most fundamentally, to restore confidence in the financial system and to grow the global economy in a sustainable manner, we must create a truly global system. We must discard the myth that finance is self-regulating and self-stabilizing, and we must also make sure that we discard the myth, rather, that policymaking can be concentrated at the national level. The G20 FSB reforms will make a huge difference if they are implemented. Canada learned during the last crisis that having our own house in order is not enough. We need others to raise their game. And that's why the FSB is increasingly focused on timely and consistent implementation of the agreed reforms. And we work closely with the IMF to identify those who are dragging their feet or who will bend the rules, and we will hold them to account, just as Madame Lagarde would expect. Now, I understand Christine will discuss a few thoughts on the global financial system and reform this evening. I do not expect her to distribute any gold stars, given her consistent focus on the future and on bettering the global system. And it was Marie Curie, the scientist who won not one, but 2 Nobel Prizes during her long career, who said, On ne fait jamais attention à ce qui a été fait. On ne voit que ce qui reste à faire. One never notices what has been done, only one sees what remains to be done. And I think if I can appropriate that motto for Madame Lagarde, it would be entirely appropriate. I will now move out of the way so something can be done. And I give you the CIC Globalist of the Year, Christine Lagarde.
So where do you want us?
One quick photo.
You want us to sit
One quick
there?
photo. No,
We'll
you
put
stay.
you in the middle.
You stay. One quick photo.
Okay.
Before anything's done, there has to be a photo.
Good. Thank you.
Okay.
Thank you.
All right.
Thank you. Great.
The speech is that. Okay. Messieurs les présidents, mesdames les présidentes, mesdames et messieurs les ambassadeurs, excellences, chers amis, bonsoir, friends, colleagues, excellencies, good evening, and thank you very much for having me with you tonight. Thank you very much for honoring me with this award that you have decided to give me. I would like to first of all thank you, Jim Balsillie, the president of the CIC, Jennifer Jeffs, and other members of the board of directors of the Canada International Council. I would like to particularly thank you, Jim, for the good advice that you've given me. You're clearly a visionary. You clearly have set up an institution that is very much focused on international connections, on observing how the world is global, more global, less global, how solutions are global equally. And I have to share with you all a little secret that Jim has offered me, which is that the IMF is extremely important to the world, but it is my job to bring a little bit of chaos in the IMF so that it can organize order in a better way. So I'm certainly taking that tip away from tonight's dinner, and I'm very grateful that you've made this recommendation to me. I would like to thank Governor Carney. Mark, thank you very much for your comments. As Jean-Claude Trichet, a good old friend of both of us, would have said, thank you very much for your comments, Mark. My father would have smiled, and my mother would have believed it. I can't quite imitate Jean-Claude's accent, but it's almost that. Actually, nul n'est prophète en son pays, as the French goes. And I have to tell you, you Canadians, you friends, that you have in the person of Mark Carney a fantastic governor of central bank. Yeah. And I would like on this occasion to thank Canada for actually sparing a little bit of Mark's talent, because as president of the Financial Stability Board and in his active role ever since he's been involved in the international scene, he has been a huge asset for financial global stability, not just for Canada, but for the world at large. This is not my first visit to Toronto. Actually, I was in Toronto 40 years ago. It's true. It's true. I promise I was here 40 years ago on a bus trip as an American field service scholar. And I was hosted one night by a very nice Toronto family whose name I can't remember. I visited the Niagara Falls. I went around this beautiful city, which was a lot smaller, but which I thought was magnificent and ever so modern. So this is not my first time, and I've been to Toronto actually many times, and I'm very grateful that tonight some of my Toronto friends and colleagues, partners and associates of Baker McKenzie in Toronto are here tonight, and I'm very, very delighted to see them on this occasion. So Toronto is a bit home for me. And Canada is a little bit home for me as well. I have to say to Jim Flaherty's wife, who is in the room tonight and who will convey the message to Jim, it's always been a pleasure, it's always been a joy to be working with Canadian colleagues, with Canadian friends, and certainly to work in Toronto at the time of the G20, but more importantly to work in Iqaluit, where Jim had decided to take the G7 and to expose us to the real world, not this cozy environment of Toronto, but the real world, where we had to have our woolly, our sweaters, our boots, and all the rest of it, and where he really displayed Canada at its best in its diversity and richness. It's a little bit warmer tonight, and what I would like to do briefly is, address some of the issues that are important to me, and then after that, I think we will have the pleasure with Amanda to take a few questions and to go through any other issues that are of interest to you. And I'm sure that there will be no question on Europe, of course. So what I'd like to do is to talk to you a little bit about the global outlook and the financial sector's contribution to that global outlook. I would like to comment on the progress that have been made towards a safer financial system, and then touch on the unfinished agenda as I see it. And as I will be addressing those 3 points, I realize the risk that I'm taking. I'm not a central banker. I'm not even a banker. I'm hardly an economist, although I'm learning quickly. And I really look at those things with my public service hat on and the experience that I've accumulated as a finance minister for France for 4 years, right at the time when France was a president of Europe, at the time when the Lehman crisis exploded, and when France was later on president of the G20 and of the G7. So as humble Minister of Finance, I had plenty to do during that period of time, and I learned a lot about the banking system, the banking business, bankers, and I would like to just share with you a few thoughts along those lines. And I ask for your indulgence, given that I don't really belong to that particular sphere. I think it's actually fitting to discuss those issues in Canada. I was talking with Mark earlier on and verifying an assumption that I have always made about the Canadian banking system. Because clearly, of all the advanced economies banking system, it's clear to me that the Canadian one has sustained the crisis a lot better and has fared the crisis a lot better than other banking systems in all advanced economies. And that is certainly attributable not just to good, solid common sense of Canadians in general, but also to a very solid regulatory system and to good supervisors. Certainly operating on the basis of simple principles, such as a cap to the leverage that you could actually display, was an attribute for a much better system than in other places, including across the border, but also on the other side of the pond. So I think it's perfectly fitting to actually address those issues in a country where the combination of the regulatory environment, the simpleness of the rules and the quality of the supervisors, as well as good common sense, have actually helped keep the system under control. But as policymakers, certainly we must look at what the situation is today, but also what the situation is likely to evolve into. And as I would like to quote, I will quote 2 Canadians in the course of these remarks. The first one is probably your most famous hockey player, Wayne Gretzky, who said, "A good hockey player plays where the puck is. A great hockey player plays where the puck is going to be." And I think the same applies to policy decision makers, where we really have to look at what the situation is as it is now, but more importantly, where it is likely to be and how we should position ourselves and what kind of policy we should put in place in order to anticipate what it will be like. Let me just say a few words about the global economic and financial outlook as we see it. And when I say as we see it, the IMF just had its annual meetings in Tokyo, Japan, and that gave us a chance with the 188 members of the organization, country members, to really compare notes and to assess our views, confront our forecast with what their forecast was. The global recovery has suffered new setbacks and growth has been disappointing at best, tepid more likely, particularly so in the advanced economies. The output is contracting in the euro area and growth has decelerated in many other countries. The most novative observations that we've made in relation to the world economic outlook is not only that growth has abated, not only that it is more tepid than we thought it would be under a normal recovery process, but we've observed that now it's not just the advanced economies, but it's also the emerging market economies, the middle-income countries and the low-income countries that are suffering as a result of that slowed growth in the advanced economies. The idea that there could have been decoupling, that the emerging market economies would just drive the show and would take growth further without being at all impacted and impaired in their development by what was going on in the advanced economies, that theory has certainly gone by the by. What we're projecting in terms of growth for 2012 has been down to 3.3 global growth forecast and 3.6 for 2013, which is lower than what we had anticipated back in July and certainly about 1 point lower than what we had initially thought about a year ago. Great diversity, where clearly from this global number you have the advanced economies that are way behind with a growth rate forecasted at 1.3% in 2012 and 1.5% in 2013. Whereas, on the other hand, for the emerging market economies and the low-income countries, you are roughly at 5.3 and 5.5 for 2012-2013. Growth, luckily, is being supported by accommodative monetary policy. And that's another factor that we have observed in the last year or so, maybe a bit longer for this particular part of the world. It's the new role from now on played by the central banks. Whether you look at the Fed, Central Bank of Canada, the Bank of England, the Central Bank of Switzerland, the European Central Bank, all those banks are clearly expanding and playing roles that they would not have played or that they would not have considered 5 years ago. They're now moving into sometimes uncharted territories, moving into unconventional, accommodating monetary policies simply because they've exhausted the various tools that they had been able to use in terms of interest rate, for instance. Thanks to that role that they have been willing to play and sometimes to the great discontent of some of their critics, and I'm here thinking particularly about the European Central Bank and the traditional German opposition to any expansion and any unconventional monetary policy. Thanks to that role, growth has been supported, but certainly held back by weak financial system, by this negative feedback loop between the sovereign debt question/crisis and the solidity of the banking institution in those countries, also hampered by fiscal consolidation, by private sector deleveraging and by policy uncertainty. So you have a mixture of factors that are actually weighing on growth and certainly having a very negative effect on the current development. We see on this rather uncertain horizon two major downside risks of an economic nature. There are other downside risks that you can think of, particularly of geopolitical nature, but of pure economic nature. One is an acceleration of a deterioration in the Eurozone, and the second is the potential risk and major risk that would be created by the realization of the risk of the debt ceiling in the United States and the fiscal cliff. And this is very short term because it's coming up at the end of this fiscal year, or this calendar year, rather, if it is not addressed beforehand. Coming back from this Tokyo annual meeting that I was referring to, where all ministers of finance, all governors of central banks of 188 countries get together for seminars, for conferences, for sessions, for internal matters as well, I certainly tried to convey one message to the membership, and that was ACT. No? Anybody who's worked with the IMF would know that anybody from the IMF operates with that kind of buzzword. What does it stand for? Nothing. ACT. 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 In other words, to try to address the gap between this policy movement that we are seeing on the Eurozone scene in particular, and the uncertainty that seems to be plaguing a lot of the decision-making by the corporate sector, we believe at the IMF that it's time for action, it's time for implementation. There's been enough by way of consideration, deliberation, procrastinated process towards decision, and that a lot of decisions have now been announced, and it's time for action. ACT now is certainly the key message that I've tried to carry during the annual meeting. And clearly, whether you look at the Eurozone, or whether you look at the United States, or whether you look at some of the emerging market economies and low-income countries, all of them have a role to play. The difficulty of the task is for each of them to consider that whatever policy decision they will make, it will not be just in their own interest, but they have to consider the larger public good that will result from the combination of policy decisions that will be made at the various national levels. Now that's a difficult point, and one that is clearly right in the middle of your jurisdiction, CIC, if I may say. How do you go beyond this national sphere? How do you go beyond the sovereignty? How do you go beyond the selfish interests that governments have about their own fate, their own renewal? Go beyond that and try to embrace something which is bigger than the national sovereign goal or horizon, to actually embrace something that is bigger and that, if properly considered, can actually be a positive sum game rather than just a sum or a negative sum game. What I would also like to turn to now is the financial side of all that, because I've been looking at the macroeconomic situation. But clearly on the financial front, we need essential movements as well. Why do we need it? As Governor Carney just said, because not all financial sector is functioning well at the moment. And in many countries, we're seeing a combination of two things. Number one, we're seeing tight borrowing conditions. We're seeing sometimes unnecessary deleveraging, which is affecting the borrowing conditions. And in quite a few regions of the world, we're seeing fragmentation. Not only in the Eurozone, where this is clearly happening, but in other countries, in other regions, where clearly there is a determined policy to actually get back to your own knitings. In other words, the parent company would certainly like to reach out to what branches, fine, but even subsidiaries are doing somewhere else in the world. At the same time, the subsidiaries, under the guidance of the local regulators, are themselves encouraged to build up capital reserves and to actually mind their own knittings as well. And that clearly goes against the natural flow of capital and the natural allocation of capital and assets around the world. So those are two movements that we are seeing at the moment. Tight borrowing conditions, often fueled by the deleveraging, and the fragmentation of the financial sector. For that reason, we certainly at the IMF welcome the call that we heard last week in a more specific manner than it was at the time of the European Council of the 29th of June for a single supervisory mechanism that would be put, at least of which the legal framework would be put in place by the end of 2012, and provisions on national resolution and deposit guarantee frameworks as well. Doesn't mean to say that it's going to be in place. Some of you have earlier asked me whether I thought that the supervisory mechanism would actually be in place next year. I think it's going to take more time than that, but my sense from having observed what the European leaders are doing, what they are not just only saying, but what they're doing, is that we will be seeing a common and a single supervisory mechanism before it's too long. It's going to take a bit of time. Mario Draghi, the president of the European Central Bank, has indicated that from a practical point of view, it's going to take probably about a year to actually put in place the required building blocks that will make it work, that will identify the right Chinese walls and the conflict of interest that will have to be addressed in order for the ECB to be involved in that supervisory function. But it will be there at some stage, and it will certainly address this issue of fragmentation, which is so important. For now, though, the financial sector, the sort of origin of the crisis back in whether you decide that it's August 2007, the very beginning of it, or September 2008, is certainly holding down the recovery in key parts of the global economy. And considering the staggering economic and human costs over the past 6 years, we must do whatever it takes to make sure that this does not happen again. I know that there are some players, some bankers in particular, who think that having benefited and then suffered and then inflicted the suffering of soft regulation, the pendulum has gone way too far to the other side of the spectrum. Over-regulations, excessive burden of regulation, cost of regulations. Well, let's turn now to the road to financial sector utopia, if I may say, which I believe is paved with a lot of good intentions. Moving to financial sector reform, what did we set out to achieve 5 years ago to build a safer financial system? And that was, Mark will remember, he was there, that was in Washington in late 2008, and then it was in Pittsburgh, and then it was in Toronto. And on each of those occasions, there were commitments and there were deliverables to be had. There was in particular the G20 Toronto Declaration, where we all agreed on the need for a safer system, a structure that would be more transparent, less leveraged, better capitalized, and more liquid. Sounds familiar to the Basel III aficionados? Yes. We would have a better understanding of the non-bank sector and about how to resolve those very large institutions that were regarded as too big to fail. I will tell you something about these non-banking institutions and non-banking sectors. I vividly remember one G7 meeting that took place in Washington, and I think that was in early 2009, where the then Treasury, head of the Treasury, Hank Paulson, had invited, I don't know if you remember that, Mark, but he had invited all the lead investment bankers in the US, who all turned up. Not very proud of themselves, I have to say. It changed over time. But I vividly remember one of them who said, okay, we completely made a mess of it. You need to regulate. You need to take the helm. You need to help us. But in so doing, don't forget to also include all these other people around us that are not bankers, that are not regulated. He was not using the word shadow banking then, but that's what he meant. I'm just sharing that memory with you because, as I said, times change. People change perspective as well. But at the time of a real profound mess, where people had no recourse but to turn to the government, to recapitalize, to use some of that TARP money that has been so useful at the time in the quantity in which it was used. At that time they said, please regulate, please sort us out, please referee, and don't forget to include everybody in the pond. This system, the system that we had in mind when we signed at the G20 Toronto Declaration, this system would reduce the severity of the boom-bust cycles and the burden of distress on taxpayers. It would serve businesses and households better, not just itself. 5 years later, that was utopia. You know, utopia, etymologically, is a place that doesn't exist. But we thought we would make it exist. 5 years later, where do we stand? The good news is what Mark has told you and what he has reported to the Tokyo annual meetings, is that a lot of work has been done, and particularly under his leadership. Major achievements in regulatory reform since the 2008 G20 Washington Declaration. The biggest advance is the new capital and liquidity requirements for banks under Basel III, which has even higher standards for systemically important banks. I have to share a confidence with you. When I was finance minister, I had wool pulled over my eyes, big way, that Basel III was not right. Basel III was too much. The liquidity ratio were completely wrong. Mind you, the first ones were probably a bit wrong. That the capital ratios were way too high, that the business model considered was to be protected and not to be damaged. Well, and on the top of it, that the cost of reform was going to be extraordinary and would hamper growth big way. And I was the recipient of many reports that predicated that growth would actually fall by at least 5% as a result of that. Now, recent research by the IMF actually shows that higher buffers, like those proposed under the Basel III rules, are also associated with higher rates of growth and lower economic volatility. I'm sure that you can find research proving the exact contrary, but we are trying to do research in as honest a way as we can, and that's what the research is actually showing. There's also been some very good progress led by the FSB on developing a new standard for the resolution of banks and on a commitment to improve the supervision of the biggest institutions. Now, it doesn't mean that progress has actually taken place on the ground, because it's not because the FSB has actually agreed on very sound and solid standards that those standards are in place, because that will take place once at the national level the reforms are embedded into the legislative systems. In addition, countries have made commitments to reduce risks in the over-the-counter derivative markets. Consensus was also forged by regulators on compensation practices and better governance of banks. So you see, a lot of progress has been made on all those fronts. And collaboration between the G20, the FSB and the IMF has been an integral factor in moving the agenda forward, not to mention, as I said, the outstanding leadership of the head of the FSB. We at the IMF have been strong proponents of the reforms and have participated actively in discussion on design, implementation and impact. The IMF has also played a central role in the development of new approaches to identifying and managing big picture risks, what we now call macroprudential policies. These are system-wide risks related to the economic cycle, market structures and to individual institutions. Canada has been a leader in this area, implementing macroprudential policies to rein in the build-up of household debt, such as lowering debt service to income ratios and increasing down payments on new mortgages. It sounds a little bit old-fashioned. Well, it is not. And sometimes the old-fashioned good basic principles of management are actually the most appropriate and most efficient ones. And it's because they had forgotten about those basic principles that other countries run into major difficulties, particularly on the housing market. All of these new reforms comprise the tools so far that will help us shape the future's financial system. And here comes my second Canadian quote. It was Marshall McLuhan who said, "We shape the tools and then the tools shape us." And that's exactly the process that is to be adopted in terms of financial regulations, not the other way around. The question is, are these new rules and principles being implemented? Are they working in real life? The IMF recently assessed reform progress. We found that reforms are heading in the right direction, but they have not yet delivered a significantly safer financial system. And while fundamental changes do take time, the basic structures that we found problematic before the crisis are still with us. Systems are still overly complex. Banking assets are still highly concentrated with strong domestic bank interlinkages. Some institutions continue to rely excessively on wholesale funding, and many institutions are still too important to fail, with no bail-in system yet in place and properly defined to actually deal with these issues without involving and exposing the taxpayers. Now, this is a bit of a gloomy way of looking at it, because there have been a lot of progress. There has been a lot of changes. There are lots of commissions. There are lots of people who are actually working hard in the background, on the side, and sometimes in the middle to actually change things and make sure that reform is actually taking place. But from our vantage point, it seems that implementation is not as fast and as deep as it could be. It's being delayed in some places, sometimes intentionally, sometimes unintentionally, and also some of those reforms are meeting strong resistance. First, some financial systems are still under distress and crisis-fighting efforts, and it's difficult to actually do that and at the same time implement the reform. In addition, reforms like Basel III have built in themselves a long horizon calendar to go with it. I'm personally not convinced that that long-term calendar is going to be operative. I think that the moment many of the players will have reached the capital ratio requirements, it will be rolling out. And no matter 2019, it will be right, hic and nunc, as the Latins would say. Second, let's face it, there are many vested interests working against change, and pushback is intensifying. It is interesting how some banks say the new regulations will be too burdensome, and yet are prepared to spend hundreds of millions of dollars to actually lobby to kill them at once. I would agree with Governor Carney that the idea of watering down reforms because of concerns about costs of the reform is actually fanciful. Our staff at the fund has recently conducted a study on the cost of regulatory reform and found that the likely long-term increase in borrowing costs, and there will be increased long-term borrowing costs, there is no question about it, would be about 1/4 of 1 percentage point in the US and lower elsewhere. Well, we are 6 years into the crisis, with over 200 million people unemployed, 30 million more than we had before the crisis started. That additional borrowing cost is probably worth paying if, with a safer, more solid financial system, we felt that yet another crisis of that nature could be avoided. Let me now turn to my third and last point. There's still work to do. Most countries have committed to adopt some or all of the new regulations, whether it's Vickers, Volckers, Liikanen, whoever. There is a commitment. The challenge now is to proceed to the end of the reform path together. The job for the FSB, for the IMF, for the G20, for members like Canada, is to push it through to its productive conclusion. What do we need for that? To start, we need concrete progress with the too important to fail conundrum. We need a global level discussion of the pros and cons of direct restrictions on business models. For example, the Volcker rule in the US, the Vickers Commission proposal in the UK, and the Liikanen report on the EU banking system will have important effect beyond their jurisdictions. And for some of the most disclosed, discussed and debated of those proposals, we know what the potential unintended effects will be, and there is already a lot of lobbying going on about it. It's also true for some of the other proposals, and there has to be a global perspective to see exactly what the unintended consequences, what the spillover effects, what the external, extraterritorial arm of those regulations will be. Second, we need further progress on recovery and resolution planning for large institutions, especially those that have cross-border institutions. Much work is underway to develop the tools to intervene in distressed institutions, but we need to move to compliance and assessment on an international scale. Third, Governor Carney mentioned it, the shadow banking, which remains a concern. And because it is shadow, you don't really see the limits of it, and the limits generally keep pushing back. This is activity by the non-bank financial institutions, generally operating outside the regulatory perimeter, and that clearly can be force for good, but also a major threat if they go completely without control. I'm very pleased that the FSB is looking into this, and we look forward to collaborating closely with them on the follow-up. For the remainder, in our view, the key word is going to be not ACT, but implementation. Implementation of derivatives market reform, which are well advanced, although not yet completed, so that instead of being under the table, as is often the case, they can really be over the counter and disclosed and known. Implementation of the FSB's principles for compensation, and more importantly, the implementation of the Basel Committee principles for effective banking supervision. Even the best rules are of no value if they're not implemented, and they don't have the appropriate, properly financed bodies to implement them. So in conclusion, I believe that a sounder, safer, more solid, better organized, better regulated and well-supervised financial sector is key for the growth development, for the job creations that are both so badly needed in advanced economies but also in emerging market and low-income countries. It's critical that this particular matter be addressed. If there is one thing that we have learned at the IMF from the spillover research and report that we have been producing for 2 years now, it's that the financial sector, the financial conduits are accelerators of contamination in the good sense and in the bad sense. And let me now share with you one thought that often crosses my mind when we think about financial sector and financial regulations. Many of you, I'm sure, will have visited le Centre Georges Pompidou à Paris, le Musée Beaubourg, which is an interesting museum and institution. Enzo Piano had a little bit to do with it. Everything is inside out. So the pipes and the corridors and the escalators, instead of being inside, where they normally are actually outside. Well, sometimes when I look at the Centre Georges Pompidou, I think of the financial sector. Critically important, the escalators, the pipes, the conduits, the way in which money moves around. But it doesn't have to be on the outside. It has to be this circulation for within the economy and not the piping system that is outside the wall. It's not meant to be dismissive. It's not meant to be negative. I personally have high respect for the work that is done by bankers, for the function of the banking system, but I think that the time has come to actually complete the job that we set out to do back 5 years ago at the time of the Washington G20 declaration. Thank you very much.
Thank you very much, Madame Lagarde. I'm now going to turn the program over to Amanda Lang, who will moderate the Q&A.
Thank you. And we do welcome your questions. If you want to use the cards on your table, we'll incorporate them into this conversation. In fact, we'll do it right now. But I'd like to begin with, you identified two separate risks or reasons for the slow implementation of reform. One of them is the weakness in some jurisdictions, in other words, Europe. And the other one imagines is the distance that we've traveled from the crisis, and one thinks of America. So that same banker who would have said, please help us, regulate us, today is saying, don't drive up my cost of capital, and what's happened to my bonus. Of those two issues, which is the bigger threat to, the bigger impediment to reform? Is it Europe, or is it that the banks in America are actually feeling just fine? And I suppose we could throw in the UK banks as well. And they've changed their attitude about reform.
You know, I wouldn't want to limit the debate to the European banks on the one hand, the American banks on the other hand, because I don't think it would be fair. I think what is of most concern to me is the general fatigue. You know, there's in the immediate after crisis, or after the beginning of the crisis, there was this momentum, this drive, this determination that was collectively shared. And this is gradually fading a bit, either because some of them are very, very busy recapitalizing, dealing with the issues, sorting out some of the banks that have not yet been restructured and that need to be restructured, and that is particularly the case in Europe. And others, you know, have this fatigue because, you know, enough has been done. They've gone through a lot of, you know, scaling down and shrinking for some of them, and you know, they probably have heard long and too long about the changes, the capital requirements, and so on and so forth. And I think at a certain point, fatigue sets in, even for those who recognize the virtue and the value of going through it, which is why, you know, together with Governor Carney and a few others, I think we are very keen to just push through, because if you were to ask me how much has been done, I would say that I would defer to him actually, but I would say from my vantage point that about 75% of the reform work has actually been prepared and done, and you are at this sort of 25% last push where, you know, you have to keep up.
Do you mean implemented when you say 75%?
Oh, no, not 75% has been implemented. The bunch of the reforms that had to take place are being formulated, are being addressed by way of agreed upon, sometimes voted through Parliament or Congress in various places in the world. And there is still that, you know, sort of 25%, whether it's the final completion of the secondary legislation, for instance, and I'm here thinking about the Dodd-Frank Act, but it's also certain sectors which are yet to be finished on the derivative markets, which Mark is much more familiar than I am. There are still some building blocks that have not yet been agreed upon.
We have some questions here about transcending or penetrating, I guess, national borders. You spoke of the issues of sovereignty. And it does seem as though there are a collection of extremely intelligent people who have come up with reforms, the answers to our problems, it's pressing them down to that national sovereign level that is the challenge. How big a challenge is it?
Well, I'll take the example of the, I'll take one life example, which is that of the European Banking Union, for instance, which is a necessary, legitimate next step for the consolidation of the Eurozone in particular. So you're talking about 17 nations, 17 member states, which each have their Congress, their Supreme Court, their institutions, and all the rest of it. Well, the concept is agreed at the highest level, but then there is a lot of technical work to be had to actually formulate the way in which it's going to take shape. And after that, there will have to be, at the national level, a proper process of banking reform, ratification of the common supervisory institution, probably disenfranchising of some of the existing institutions for part of their attributions, so that there is, good delegation work from the common supervisory system, the single common supervisory system, and the national authorities which have done their job so far. So that gives you an idea of the sort of effort and abandonment of sovereignty that needs to take place, including in very technical areas such as banking supervision, for instance.
I'm going to horribly...
And that says nothing about the budgetary process, for instance. If you look at the Eurozone, where you want to have stronger fiscal union, what does it mean in practice? Does it mean that each national parliament is disenfranchised, operates as a secondary institution once it has been vetted at the European level by an institution that is either elected or non-elected? I mean, there are lots and lots of issues that have to do with both the legal construction, the architecture of the zone, and political authority.
One of the questions we have is, knowing what you know today, would you support the formation of the euro if it was considered today? And if so, would you change anything?
It would be nice to rewrite history, but you can't do that. I think you have to sort of turn back and look at what the founders of the Eurozone effectively wanted. And I think they built that currency zone under the assumption that it would be step one, but that then there would be a very strong step two, that would be not fiscal consolidation, but fiscal union and collective determination of economic policies for the entire zone, to be followed by banking union, to be followed by political union, and so on and so forth. And they thought that they could, sort of start from the monetary base. I think it was Jacques Delors' idea that to have 1 euro as a single currency within that zone would be sufficient to then precipitate the rest of it. Unfortunately, it didn't happen that way. And if it could be redone, certainly to move forward on a parallel track, both on the monetary and on the fiscal policy front, would have been probably a safer way to go. But you can't rewrite history.
From the outside looking in, it looks very dire. We hear from people like you that there's progress and that we should believe that the heads of state in the Eurozone are actually, in fact, working together. Can we believe that?
Oh, yeah. Yeah. No, they are very certainly working together. But, you have to imagine yourself. It's as if, say, the government of Canada, the government of, everything being relative, because obviously the countries are much bigger, but it's as if, as I said, everything being relative. The government of Canada, the government of the United States, the government of Mexico, plus another 10 or 12 governments in Central America, for instance, decided to form a union and decided to take decisions together. It's a bit far-fetched, the comparison, but it's not that far. That's what you're talking about. Sovereign, distinct member states who have quarreled,
You're not creating a sense of
killed
optimism.
each other for many, many, many centuries before, and who decide to work together. So yes, they are working together. Yes, they all have their respective national political agenda, their own, as well as their sort of national agenda. And are they making progress? Yes. Yes, they are making progress. You know, when I was Minister of Finance back in, you know, starting in 2007, there was none of that discipline, none of those sanctions that are now applicable to those member states that do not respect the rules. So that has changed enormously. There was no there was no firewall, as there is one today with the European stability mechanism. There was no idea at all that you could actually bail out support and help and do a bit of transfer towards one member of the zone from the others. So there have been enormous changes. The only problem is that it's incremental, it's gradual, it's laborious, it's 2 steps forwards, 1 step backward, and clearly you all are doing your job, and the 1 step backward is far more interesting than the 2 steps forward. So you tend to have the impression...
See what you did there? Yeah.
There's a little bit of that.
Yes.
Nobody's interested in trains that arrive on time. So, same is true.
Well, speaking of arriving on time, it's all the time we have. You've received a great many questions from the people in this room, and I'm going to give them to you because they're good questions, and I apologize that we can't get to them, but unless you all want to stay till midnight. Right. Thank you very much.
My pleasure.
Thank you very much. I'd like now to invite Mr. Gordon Nixon up to the stage to give some thanks to Madame Lagarde.
Good evening, ladies and gentlemen. After all the comments that were made tonight about bankers, I'd quote Mark Carney and ask if perhaps I should switch careers and become a circus clown. You have to have heard Mark Carney's comment the other day to understand that. It is a pleasure to be here, and on behalf of the Canadian International Council, I'd like to thank Madame Lagarde for her keynote address and for her candor during the question and answer period with Amanda, and my sincere congratulations on the Globalist of the Year Award. As Madame Lagarde has said, central banks and governments around the world must continue to work towards consensus on how to heal this challenged global economy and avoid a repeat of the economic crisis that we have yet to recover from. The challenge for all policymakers is that there is, of course, no silver bullet. It's easy to say that solutions lie in a blend of monetary, fiscal, and economic policies that bring down debt levels, that increase employment and restore confidence and growth. But consensus is a much greater challenge, and ideology about the best way to build a stronger economic future, particularly in the United States and Europe, has never been more fractured and more fractious. Now, I was going to make a comment on the impact of excessive regulation, but given Christine's comments, I think I'd be wise to stay quiet. But I would say that higher liquidity, higher capital, and lower leverage is something that Canada benefited from and something that the world must move towards, but also caution that regulating to the lowest common denominator is not necessarily the best solution in terms of preventing economic drag. And I say this with some humility. As was said, our industry certainly has based on recent history, has clearly proved to put its interests ahead of other constituents and certainly hasn't lived up to societal expectations. But it is important that we move forward, that politicians stop blaming bankers, and bankers blaming investors, and investors blaming regulators, and regulators markets, and markets blaming governments. The reality is that we all know there's plenty of blame to go around, and the most important thing is that we look to the future and that we bring balanced solutions to these complex and difficult economic and societal issues. We need austerity and we need growth, and in my view at least, the two are not mutually exclusive. Christine Lagarde is one of the key players in finding those solutions, in ensuring the right balance and building that badly needed consensus that we need around the world. We are all beneficiaries of her strong leadership and her role at the IMF. I think her remarks tonight, her passion and her understanding of these issues is evidence how fortunate we are. She has had a remarkable career as a lawyer, as a politician, as a public servant, and who knows, perhaps a future president of France. She is a great role model. She would get my vote, but I'm not sure she'd want that on her resume. She is a great role model, and she is a great inspiration to all of us, and it is an honor to have her with us this evening, and we certainly wish her the best in what is one of the world's most important financial roles. Please join me once again in thanking Christine Lagarde.
Thank you very much, Mr. Nixon. Before I close the evening, I'd like to take a moment just to thank all our CIC supporters, our CIC Senate members, Bennett Jones, Gluskin Sheff and Associates, Power Corporation of Canada, Royal Bank of Canada, Tech Resources, our media sponsor, the Globe and Mail, Platinum sponsors, AGF Management Limited, Barrick Gold Corporation, BMO Financial Group, Sun Life Financial Inc., our gold sponsors, Baker & McKenzie LLP, MDC Property Services, Scotia Group, TD Bank Group, and our table sponsors, Affaires Aujourd'hui Inc., the Honourable Bill Graham, Acon Group Inc., the Canadian Forces College Foundation, Morgan Stanley, Omer's Administration Corporation, Paradigm Capital, Wheelhouse Capital Management. Thank you very much, ladies and gentlemen. That concludes our evening. Good night.